Welcome to another episode of the Wealth Blueprint. As a real estate developer, we've built, sold, and developed property in over 20 different cities, or 20 different states, I should say, and over 50 different cities. And today we're going to explore one of the new cities that we're developing in Houston, Texas. Houston's a huge city. It is soon to be the third largest city in the United States. And so it's made up of a bunch of different pockets. And so we're going to explore some unique areas in Houston that we're developing in, what makes it so special. And today my guest is Semyon Sharetskiy, who is a real estate partner and a friend down in the Houston area. He's a real estate broker and also an investor. Provides some really good insights on why we're down there and what the next 10 to 15 years looks like. So I hope you enjoy and you'll learn a little bit along the way. Thanks.
Semyon, thanks for taking some time to meet with us. Most people know about Houston. I think it's the third or fourth largest city in America now.
It's the fourth largest,
The
coming up
fourth.
on the third largest. Pleasure to be here, Addison.
It's about to take over. What is it? Chicago or
Chicago,
Illinois?
yeah.
Yeah,
Chicago,
Chicago. Um, Semyon is my brother from another mother, the goose to my maverick, the I don't know. I'm running out of what other the Tom to my Jerry.
There you go.
So our investment company, I've built property and rented property and sold property in I think 24 or 28 different states now. And around COVID, we got really hyper focused on the Sun Belt states and Texas specifically. That just seemed to be where population migration was headed. No income tax, run by Republican governors, business friendly states, that kind of stuff is kind of where we focused. And then when we, focus down from that, we like to see municipalities that are spending tax dollars that are going back into the growth of their economy, reinvesting in the community, educating their own workforce, all of the little micro things that we moved on. And Semyon brought Houston to my attention. We were poking around there, I don't know, probably 2 years ago. But we were really having trouble finding traction on anyone that we could trust down there or to do deals with. And Semyon is the glue that binds us to Houston. He's a real estate agent, an investment professional, and just the overall gangster of real estate. So, Semyon, explain to our viewers kind of what your background is, how you got into real estate, why Houston specifically, and then we can dig into the specifics of the investments down there.
Sure, absolutely. Thank you for the kind words and the introduction. It's always a pleasure to work together with you, Addison. As far as what got me into real estate is a very simple book by Robert Kiyosaki, Rich Dad Poor Dad, that piqued my interest.
A good one.
And then I went to a bunch of real estate seminars, and they talked all the different ways how you can make money. And I grew up in California, and in that market, almost impossible to do any of the cash flow strategies, investment strategies, building a lot of code, in some places you can't build at all. So cost of living is significantly different in that part of the country than in Houston specifically. So what brought me to Houston was actually the low cost of living, good paying jobs, and the warm environment. So maybe it's a little too hot for some people, but I enjoy it. Don't have to shovel snow. So
yeah, it's definitely not. A lot of people. It's a dry heat. Well, it's definitely not a dry heat.
It is not a dry heat.
Yeah.
We've gotten used to taking a couple showers a day. That solves all the problems. As far as the market, one of the things that makes Houston very special, even within the state of Texas, is different, is it doesn't have any zoning laws. So what that means is any piece of land can be fairly easily converted into its highest and best use. Now, there are deed restrictions and things like that still apply. But for the most part, what that means is you can take, for example, a house that was built in 1920s that was sitting on an acre lot, and you can take that acre lot and then you can subdivide it into building multiple houses so that it's more affordable for people to live. So what City of Houston has been doing a lot is streamlining the permitting process as much as they can, and investing ever since 2017, investing a lot of money in flood mitigation. So the homes that are built today are much stricter code. So the chance of flooding for the entire area, let alone for that home, are drastically reduced by all of the drainage requirements and things like that.
Yeah.
As far as um, the growth of the city, in 21, Penske sent the most trucks to Houston in Texas overall, but Houston is very diverse city. It's very
Penske is a moving company.
moving company, excuse me. Yeah, the Penske truck moving company, along with others. And Houston is continuously growing. It's got 145 different nationalities. It's a melting pot of cultures. If you're a foodie, lots of great restaurants. We have, all the major sports: baseball, football, basketball. At one time, we even had a hockey team, but maybe they'll come back. We'll see. Baseball. So it's all here. It's a large metroplex, and effectively, we have two styles of living. There's city living, and then there is the suburbs. The suburbs are more of a uniform, where you have sections of homes that are built in certain price ranges with certain finishes, and then things inside the city are more diverse, in the sense of you can have a $5 million home next to a $1 million home, next to a $500,000 home, next to a $300,000 home, next to a $50,000 home. And that's because of the historic nature of how old Houston is and how each lot redevelops over time.
Yeah, next to a Blockbuster, next to a
But used to be a Blockbuster, but no more.
next to a record store. No, I mean, I think people miss like the importance of that. I mean, they, as a developer, as a builder too, like it is a massive advantage to be in a place that's deregulated, that doesn't have strict zoning laws. And it's, they're developer minded. So the city kind of understands what it means to incentivize builders, and those laws being available, or lack thereof of those laws, makes it a place that's easy to acquire property, take a risk on, breaking ground and building, and creating a market for a home buyer or a renter. Whereas in other cities, I've done, even in Austin, Texas, I've done some development stuff there, and, buying property and subdividing it and turning it into lots, I'd have to deal with even like an arborist that would come around and tell me which trees on the property I could take down or not take down. And that's a 6-month process. So I'm sitting on an asset that I can't do anything with until the tree guy tells me that's a tree you can cut down or not. It's kind of insane. Whereas in Houston, I mean, I think on all the property that we've bought in Houston, I mean, within, 60 days, we're ready to move. We're ready to, dig footings, pour concrete, and go vertical. And I love that. Are you seeing that in Houston as far as like development friendly, incentives for people to build more?
Yeah, very much so. Because again, the city's growing, and one of the things that people forget is that home ownership can be affordable. So in Houston, it's still cheaper to own than to rent, and the reason for it is because supply and demand. So we're still missing, a lot of homes that need to be built in the Houston area.
You guys added like 700,000 jobs in like a 4-year period, right? Like between 2020 and 2024, there was close to 700,000 jobs created. Like that's insane. First of all.
Yeah, and the different sectors are strong here. So strong medical sector, one of the largest ports in the nation, strong petrochemical, both upstream and downstream. So it's strong energy sector, strong financial sector. So it's it's a very diverse field in the job market. So we're not like a boom or bust town. It's everybody, if one sector is not doing well, you can migrate to another sector. So
Well, I
it's
think I think that's important for people to understand too when you're looking at any city, right? What is the mix of its job creation, like the future potential to create jobs, but even more importantly, the um, recession resistant jobs that are currently keeping the economy afloat, right? So in Houston, you have, oil and gas, petrochemical, you also have tech, and then you have the medical industry. And
yeah,
that's just, touching on, I think there's 24 Fortune 500 companies,
26 that have headquarters.
26
Yeah.
out of the Fortune 500 that are headquartered in Houston, right? So you have, like you were saying, you have kind of this balance economically on
Mhm.
on job creation, but also job stability. Of you don't have this big boom and bust. And if kind of take a look at the tea leaves on where the country is going after this last election, I want to have my money in oil, gas, American companies, tech, and medical. I mean, I just don't see how you can go wrong over the next 10 years in that.
Well, like Warren Buffett says, to bet against America is a big bet. So we're always betting on it, and it will continue to grow. And Houston is what's nice with the leadership in Houston is they're continuously looking to grow on the economy side, on the housing side. They're putting a lot of money into infrastructure and encouraging the process for everybody.
Absolutely. I mean, and then you also have some very respected universities there. You have Rice University, which is Rice a Ivy League? Is that considered Ivy League? I'm not
Uh,
smart enough to know what's in the
I,
Ivy League or
I,
not.
I would say it's definitely right up there with the
It's
level of
Ivy League
respect of Ivy
adjacent
League. Yeah.
at the very.
I'm
It's
not
I.
sure. I'm not sure who fills in that club specifically, where that cutoff is, but they're definitely
I want to say that Ivy League is Rice is in the Ivy League, and if not, it's like Ivy League adjacent at the
correct.
very
Yeah.
minimum. I'm pretty sure. And then you have the University of Houston, and you have some massive medical centers, education centers there for trade
For
schools, all sorts of stuff.
trade schools, and as well as we have a lot of doctors who are coming here for their residency in a diverse amount of fields. So it's there's a lot of uh, job growth and people that are high income earners, and actually across the board people work because the affordability is so abundant. You can live a good life, kind of the American dream, so to say, here much more easier than in other parts of the country.
Yeah. So why is that? So when you look at cost of living in major metropolitan areas across the United States, including in states that are very business friendly, like Florida, Nevada, um, Tennessee, right? Houston is the fourth largest, soon to be the third largest. You'd think that cost of living would be increasing at a rapid rate, along with the you know employment surplus and increased wages, right? But we're
Right.
not seeing that. So why is that? Why is Houston still so affordable in comparison to every other major metro?
Well, one of the really simplest answers to all this is always supply and demand. The if you can have a balance between the supply and demand, then affordability is still there compared to people's wages is what it comes down to. Property values are still growing, and depending on the neighborhood, they're not growing at the same pace. So I don't want to give the impression that every part of living anywhere in Houston is affordable just to anybody. But on average, you can find great places that you can live either in the city or in the suburbs. And that comes down to being able to build fairly easily and have the inventory of homes that people want to live in. And also not just homes, but apartments as well. So that's why we see also a very strong renters market where renter rates aren't being, ginormously um, expanded from year to year, but it's a steady
Yeah.
increase like anywhere. Um, but because you have supply that's being built, still not enough of it, but it is being built at a faster pace than other places in the country. Um, it, simple competition.
Yeah, and you're not competing against, um, historical landmark restriction. I mean, there's so
Yeah,
many that goes in. Like, we're in Chicago. A building that should be condemned in, let's say like Ukrainian Village or Logan Square or something like that, right? I mean, you're talking about a quarter acre, maybe. And that property, in order to acquire it, you're looking at probably $700,000 for a quarter acre. Then you have to go through all of these, constant, checks and balances from the local officials, then the city, then, the aldermen, right? Takes forever to
right.
get it, right? And then they restrict how much inventory you can actually build there. So there's a height restriction. There's you know, you can only put 6 apartments on this property, units. Okay. Well, if that's going to be the case, rent is going to be at a massive um, shortage, like available units to rent, right? And developers are going to need to charge a lot more for that to make it make sense for that property that they bought. Whereas in Houston, there's still so much abundant land. That's the other thing I wanted to touch on
Yeah,
too, is that Houston is a city that's built out.
correct.
So there's still these downtown centers that are built up a little bit, but you
Yeah,
don't have these major, you know, restrictions on like the little metropolitan area that restricts what Houston proper is. And so you can build out. And because of that, there's just way more availability, not only an opportunity to acquire, but an opportunity to rent or buy as a homeowner.
hmm
You're not just stuck. Like I want to be in Houston, like, in Austin, you're stuck in Austin. And then to get outside of Austin, the system that like that population grew so quickly, you live outside of Austin, it takes forever to get in and out of downtown Austin because the infrastructure was not set up to support the amount of population increases.
yeah. And the other part that geographically, we are also not. We don't have any hills, so it's also easier to build from that point of view as well, because whenever
Yeah.
you're building on elevation, that the cost is higher, but also just from an engineering point of view, it's significantly harder.
Yeah, that's a really good point too. And your soil is really good. So there's not a lot of like soil issues. Um, yeah. So makes
The
makes things easy. It's a lot
yeah,
more like,
makes it easy to expand. The only issue we ever have to consider is on the flooding side, but that's fairly easy to again mitigate as long as you see it in advance. And that's where if you look at the FEMA flood maps, they're very accurate in terms of what the flooding looks like. And then with a new construction technology now, you can build houses in a way that even if you are in a let's say a 500-year flood zone, your house won't flood. Back in the day, where a lot of houses, let's say, were built in the 1950s, they only were built on slab. There weren't a lot of pier and beam houses with the elevated technology that's there now.
yeah.
So the homes that are being built today, it's the example I always give. It's kind of like if you buy a new car today and a new car from 1930. They may be new cars, but they're so drastically different in what they have in them that it may be like this is the bare minimum, but today's vehicle is like a rocket ship compared to what it used to be in the 30s or the 40s.
Yeah, sure. So from a 10,000 foot view on Houston, I mean, give me, kind of the highlights of why Houston is positioned for like such great growth over the next 5 to 10 years. And then I want to dig into like the little pockets of Houston and what makes the most sense.
Sure. So let me give you some stats in terms of we keep talking about growth. So let's talk about specifics. So this data comes from Houston Association of Realtors, who keeps track of all the sales and provides reliable data. So in August of 2019, the median sales price was 249,000, and the average sales price was $310,400. Today, in August, or excuse me, I mean, in 2024 in August, we are looking at median sales price being 336,940, and the average sales price being 421,900. So we can
Was that
see it
60%?
over 5 years. We're looking effectively at about 100 grand of growth. That's what I mean by it's continuously steady going up. The big difference that we've had is the amount of total sales have been going down the last couple of years because of there's actually been fewer starts for new construction.
Yeah.
So because the new construction always drives the ability to resell. What people don't realize is that people who are looking to move up, if there's nothing better to move up to, then they're going to stay where they're at. And that pushes people who are renting to not be able to buy anything.
Yeah,
Because,
there's no opportunity cost.
right. It's similar to kind of how used car vehicle market works. If you never sell a new car, there would never be a used car. So the only way you could buy a car is if it was a new car. So there's a ladder that is created organically by people trading up and things like that. So same thing happens in the housing world. And because of the events in the last several years of economy, lockdown, lots of turmoil on that side, that caused some of the construction starts to be slower, but slower still outpaces the country by quite a bit.
Yeah, and so I mean, so builder sentiment being lower over the last few years, it is kind of a national phenomenon.
Yeah.
And there's a lot of reasons for that. One is that when the Fed increased interest rates drastically in a short period of time, it put a lot of pressure on banks and the rate that they would, there's not really a secondary market for construction loans. So
Yeah.
when you go to get construction financing, it's typically a portfolioed product that the bank is giving to you directly. They don't go and sell that product on the secondary market. They're holding that paper the entire time.
Correct.
So those interest rates doubled. You went from borrowing at 5% to borrowing at 10 for new construction. So the starts went down just automatically because of that. And then demand was down because of home buyer sentiment being a little bit low and waiting for, hey, are these interest rates going to adjust? They're a little bit sensitive to that. Well, now what we're seeing is that nationwide, and then if you look at especially the Sun Belt states and you look at specific, municipalities, builder sentiment is starting to creep back up. They're starting to have more starts on the ground. You see the D.R. Hortons, the Lennars, the Toll Brothers all starting to move dirt again. So what does that mean? Why is that? It's because the interest rate seems to be stabilized a little bit. It might be a little bit higher or a little bit lower for longer, but there is such a pent up demand for new construction. We can't even service the amount of demand that's out there right now. And to get caught up, if everybody was going like 100% servicing the amount of shortages across the United States, it would take like, I think 4 years to get caught up on inventory. And that's assuming that there's no new
under perfect conditions.
Under perfect conditions, right? So we're far behind, which is interesting. And then you also have these global conflicts that are going on that restricts supply chains, and it makes materials more expensive. So just by default, property values are going up because of the replacement costs. The cost to replace or build a property right now are also up, 40% from where they were in 2019, which is kind of insane. So you really want to focus yourself on markets that have lower cost of living like Houston and that have all the economic indicators that you want to see. You want to see job growth. You want to see job stability. You want to see a local education presence that's educating its own population and keeping those graduates in the workforce as they graduate. And you want to see the city of Houston being business friendly and attracting business, which, 700,000 jobs in 4 years seems like they're doing their job pretty damn well, if you ask me, right? So from a 10,000 foot view, amazing market. It has all the indicators you want to look for. Then the devil's in the details.
Yeah.
Where do you invest in Houston? Where's the opportunity right now? I'm a little bit different where you and I can talk about a deal and buy, I can buy 100 properties or build 100 properties, and there's like long-term growth value there. But if I'm an average investor, this is my first or second deal, where's the opportunity in Houston? What am I looking for? What do I need to be worried about?
Okay, so we have a lot of clients like that we've helped over the last 10 years and more. What it always comes down to is I would say, a couple things you want to consider when you're buying a house for rent or multifamily or any kind of investment. But typically what we suggest is if you're new or newer, you start with something fairly small, and there's nothing smaller that you can go than with a house to rent, because outside of that, there's not a lot of other options. The other thing you want to consider is a growth area, because typically the suggestion that we have is that you're looking for both your rents to go up and your equity to go up. There are areas of town, for example, where the rents go up, but the equity doesn't, either stays the same or actually goes down. And there's other parts of town where the rent stays flat but the equity goes up. So a good example of that, of some of those things, at the current moment in the suburbs of Houston, and whether it's Katy, Spring, Cypress, Sugar Land, just kind of anywhere across the board there, the rents are staying about the same over what we're seeing in the last 5 years, but the values are going up. So from a cash, I should say maybe from an equity position point of view, value for dollar, you're not increasing it, because what you want is both. What we're seeing where the properties are growing in value are towards the center of the city, and effectively in the 610 loop and around that area. The Heights area is a good example that redeveloped through the development we just talked about, starting like around 2012, and really saw a dramatic transformation of the entire neighborhood, where homes were valued maybe at about $150,000 to $200,000 to now where we have new construction selling anywhere between $1 to $3.5 million. If you talk to people who lived in the Heights in the 90s, they would say, "Oh my gosh, who would want to live here?" Because the entire neighborhood, there wasn't a lot of socioeconomics going on. Now it's the opposite. It's one of the most, from a retail point of view, we have huge HEB that came in, bought an entire block. We have the city spent millions of dollars putting in new drainage, new sidewalks, new streets. The amount of bars, restaurants, coffee shops, just like all of the retail side come in is immense. So you see a complete revitalization today. If you drive there today, you're like, oh wow, this is just like how it should be. But that's not how it looked even 10 years ago. Not even how it looked
That's
5 years ago.
That's the thing that the municipalities miss, and that I love about Houston too. And in addition to that, one thing that you might be aware of, you might not know, but in addition to doing all of that, the city of Houston also waives impact fees for builders on in areas of town and projects that they're trying to incentivize people to buy more or build more affordable properties. I think
Correct.
the limit's like 350,000 or something like that.
Yes,
So
somewhere around that. Yep.
if you can build and deliver a property for under $350,000, they waive your impact fee. Well, on a project the size of the ones that we do, that's $80,000 per project in impact fees.
Yep.
I get to pass that savings on to my investor or the end user of the property, right? So, they're buying a property for 330,000, it appraises at 340, and I got to pass on that cost savings to them. And so having that ability with the city of Houston too is just so massive. They're so smart in the way that they structured this. Now, are they a bureaucracy? Do they get bogged down? Do they take a little long to do things? Yeah, that's in anything that's inefficient set up that way. But as far as municipalities I've worked with across the United States, Houston is by far in the top 5, easiest to work with, and they're the most development minded in how to go about revitalizing an area where they can do it in 10 years. I mean, that is also insane.
Mm-hmm.
When you think about the if you want to call it gentrification or revitalization or whatever you want to call it, to be able to turn an area, a whole neighborhood around in 7 to 10 years is a work of art.
And we're talking about, not large swaths of land like you have. If you go out in the suburbs, you can buy 1,000 acres. We're talking about lot by lot, and some of these lots are 5,000 square feet, some are 25,000 square feet. So not 10 acres, because that's where the suburbs you get that uniformity of layout.
Right.
And so, yeah, City of Houston has done a good job with that, along with, I would say, but also the same thing on the suburbs. It's just in the suburbs, the tax rate is also much higher. That's the other thing, is significantly higher than it is in the City of Houston. So from a holding cost, it's significantly cheaper to have property in the city than in the suburbs on average.
Yeah, I love that. So let's talk specifically about, give me 3 neighborhoods in Houston inside the loop that you have identified as like, hey, and maybe there's not 3, or maybe there's
So
more than 3. But when you're talking about equity increasing and the
yeah,
ability to push rents, let's talk about markets that hit that metric right now.
so it's specifically actually an area that's directly adjacent to the heights that we just talked about, and Oak Forest Garden Oaks, which is another neighborhood that was revitalized, but those were done it's one lot, one house on those, and those homes again are multi-million-dollar homes today. So the area right adjacent to both of those, it's called Greater Independence Heights, and that's the area. And I say it's fairly broad, but we're talking about an area that's depending where, 10 to 15 minutes from downtown, 20 minutes to the medical center that we talked about, where it's teaching hospitals, things like that. So you're fairly close to, again, to all of the things, just like the Heights was, and that's the area that's redeveloping now, and that's the big opportunity for both property growth in equity and in rent as well. Because the properties, for example, in 2014 in the Heights, in certain parts of the Heights, you could have bought property for 325,000. That same property today is about double in worth, and part of the worth is you can get bigger lots, you can get more of the house. So as as you may keep the same price on some things, but then you get less, if that makes sense. Kind of, you get shrinkflation. So instead of getting a 5,000 square foot lot, you're getting a 2,500 square foot lot, something like that. So land is definitely more at a premium in the city versus the suburbs. But Greater Independence Heights is a good option for both rent and equity growth for home ownership.
Okay, and if we talk about a 10-year cycle, right, for revitalization, where are they on that curve? Are they
So
in year 2 or are they in year
they're
7?
in year 4, going on to be year 5. So even 4 years ago, when it first started, home values have gone up quite a bit. In that same, you could bought a new house for about 200,000, and now they're in the 350s, 330s, all the way up to 470s price range, just depending on the size and finishes.
Love it.
So it's definitely I don't think it's quite in the mid, but almost to the mid, because from there it kind of happens much faster. That's the other part. The thing that we can't predict is how quickly it will finish, but the start is, once you get to halfway, it goes much faster after that, because then everybody recognizes, oh, this is a good neighborhood. Great, I want to live here.
Yeah, I mean, the first step is rooftops, right? And then the second step is commercial redevelopment, and
Correct.
that's when all that comes in.
And that's what we're seeing already happen, because they also see how many homes are built and are projected to be built. So some of the commercials already coming in and redeveloping, and more is on the way.
All right. And what about any other neighborhoods that meet that?
Another neighborhood is Spring Branch. There's also quite a bit of redevelopment there. Much more limited pool, but that is also a good option, but a bit higher price pointage just overall versus the Greater Independence Heights. And then as far as the rest of the places, it's still all over Houston is developing, but I would say those are the 2 main ones at the moment. We have yet to see where the development will take the rest.
Which one's that called?
Spring Branch, and
Why
there's
haven't you sent me anything in Spring Branch, dude?
I'm holding the best for you. So there's good options there. And as far as development for the rest of the city, we shall see where it goes, because one of the things that I caution people about is being the pioneer, being the only one and nobody else, because development will happen, but we just don't know when. So it's almost a little bit easier when independently many different builders and developers get together and kind of work in one area, because then they bring a level of uniformity.
Yeah, there's, unlike the tech sector, the first mover advantage in real estate is very rare.
Yeah.
A lot of times you want to be, the third or fifth developer into an area.
And there's a lot of caveats to that. So again, it depends on the size of the project. So if you're going to build, 25 to 50 homes, that's significantly differently than you're building two. So that's
Right.
the other part, where sometimes being first can work, but typically you have to do it at scale. Building one or two homes and being first rarely leads to positive results in a significant way.
So what's the attraction to Spring Branch? Why is that? I mean, I understand New Heights. We're very familiar with that little pocket.
Sure.
Why
Spring
Spring
Branch.
Branch? What's there?
So one of the things with Spring Branch is it's, again, centrally located, just on a slightly different part of town. You're located to, actually, small fact for the World Guinness widest freeway. It's half a mile long. That's how wide the freeway is out there on Katy Freeway. But the attraction there is it's the neighborhoods that are redeveloping don't have any restrictions in terms of subdividing, so you can put multiple homes on a lot. But it's surrounded by neighborhoods that do have those deed restrictions. So again, those neighborhoods are multi-million-dollar homes, and to build those affordable homes, this is the area that's redeveloping. So that's the other part, and it's a little bit more family focused. It's more of like a half a sub, well, not half a suburb, probably the best way to put it, more suburban like, but still close to the city and central living.
Yeah, what just occurred to me is what's so silly in real estate, and I've been doing this for 15 years. I've raised money on Wall Street, lent it to developers. I've done lending, 100+ million-dollar deals to developers. Every single one of them, and now as a developer myself for the last 10 years, every single one of them, everyone's like, what's the secret sauce? How do you take the first step in real estate? How do you identify an opportunity? Blah, blah. This is exactly the conversations that you have with people.
Yeah.
It starts off with why that area, what's there, what's the demand. And if that makes sense to you, it might not be perfect, but if that makes sense to you, that's when you start needling in the details of like, okay, well, let's put a microscope on that and really drill down on if this makes sense and where we should be buying. And it's that simple. It's not, there's some like grandiose plan, or, we paid off city councilman to tell us where the city's building roads or anything like that. You know what I mean? It's like we're doing third grade math because real estate is so easy to understand from a math perspective. There's only so many variables that you need to account for on the math side.
Right.
And then it's really about, do you believe in the long-term viability of the macro economy in the area that you're investing in? And even sometimes just the little neighborhood that you're investing in. Not, hey, it's all of Houston. Great. You can't go wrong in Houston. It's okay. Houston's viable.
Right.
It's been proven. Now, what are the little micro details that we can drill in on? So when you're talking to investors and helping them with that, are you noticing the same thing? Like what's the biggest fear that they're having about, taking a leap into following, the advice that I just gave?
So I see probably three biggest fears or things that stop people from doing. Number one, they always say, I don't know if I would live here. So they're in their mind, instead of buying a home that somebody could live here, they're trying to buy a second home for themselves.
Right.
And I think that's, and again, they're comparing themselves. Typically, you're older. They're comparing themselves to, oh, well, why would somebody live here? And you go, hey, when I was 20 and I could rent this place, I would be excited. If you
Yeah,
were
luxury bias is a real thing.
Yeah, luxury buys so when you're in your 50s or 60s and you're talking about buying, or 40s, and you're significantly different socioeconomically than when you were in your 20s. You don't realize that what to you now is basic is
Right,
luxury to somebody else.
right.
And that's one. The other part that I see is missed expectations on what people think they should be making. There's not a single client or person that I know who has bought real estate 10 years ago, 20 years ago, and regrets owning it. Not a person. As long as they can afford the payment, or they paid it off, however, nobody regrets buying real estate, because everybody feels like a genius, like, oh, I did such a great job. Of course, I knew, pat themselves on the back, how smart I was. Because what it comes down to, if you look at real estate, it has never fallen. The only time we've had a genuine drop historically is when we had fraud committed in the 2008s, where in the lending world. That was the only time where we had a mistrust in how housing prices work. But
But
outside of
even
that,
then, that's a
but even
blip
yeah,
in the radar.
correct. That's what I'm saying. But even then, that was unicorn cases where you saw major drops. On average, the market still stayed the same and is higher than ever before. So overall, people's expectation typically is that they want to make the 10-year return today. And what they forget is that your first year return is always the lowest. And the
Yeah.
longer you own the property, the higher the return in both equity, rent, and just your costs are getting less. So I think having the right expectations, and then along with that, some people want to win the lottery, in the sense they kind of say like, well, I could buy, if I bought Tesla stock, it went up 10 million%. Great. Did you? Did you buy
Yeah.
enough of it? Because one of the things with real estate is that, unlike stocks, for the most part, you can't buy it on a leveraged way. So with investment real estate, you can put 20, 25, 30% down, but you're collecting the equity, the appreciation from the entire amount.
Well, you can buy stocks leveraged on margin,
On margin, yes.
but the difference is, for the most part, the big difference is that, real estate has several different income streams,
Yeah.
and stocks do not have the same ability to provide you passive revenue.
Correct. Yeah.
It's all about the upside, or if you're shorting a stock, and you take way bigger swings in that. It's really interesting. You brought up like 2008, and I've been in this world for a long time. I was actually doing lending in 2008. So I was lending on portfolios to big developers. But at the time, in Nevada, actually
Yeah.
it's still the case, but in Nevada, the Bureau of Land Management, which is a thing that most states don't deal with, but the BLM owns a ton of land in Nevada, a ton of acreage, and they auction off sections of that land every year to be sold to developers that want to build. And so we would do financing to those developers, and you're talking about 25 to $300 million worth of acquisitions, right? And then I saw all of that crash, 2008 to 2012, and it scared a lot of people off. But when you talk about investing in real estate, and I love that you brought that point up, the key is, it is not this get rich quick scheme. It is not, if I would have bought Apple, or even the expectation that they're going to buy a property now and they're going to make $100,000 in a year. Yes, those deals exist, but it's very, very rare. The real key to investment in real estate is time and distance. It's buying it at the right time, and sometimes it doesn't have to be the perfect time. I mean, it's rarely ever a perfect time, right? But then the distance in which you own that property and keep it. So even those people, if you would have kept your property in 2008 instead of letting it go back to the bank or foreclose, you'd be up 2 times what you owned it for, even at those elevated values back in 2008.
Mm-hmm.
And then you see people like Dave Ramsey, who for the most part, I'm a fan of Dave Ramsey. I think that he provides a good service to people that need to kind of get their finances in order. But he got burned in 2008. And because of that, he tells everybody that they should never borrow money to make an investment. They should never leverage real estate. And to me, that's like just a complete lack of understanding of, if you buy smart and you leverage your real estate, you're putting 25% down. So you have 25% equity cushion, and you're not in it for a short-term return. You're in it for, I'm going to hold this for 5 to 10, sometimes 15 years. And even then, I wouldn't suggest selling it. I would suggest refinancing, taking some equity out, and buying more assets. So you're not paying
or
any,
doing a
any gains.
1031 exchange to
Or
buy a
doing a
better
1031 exchange. So to me, that just kind of provides this like lack of knowledge in the sector that gives people a reason to be fearful. It's like, well, 2008 happened. I don't want to take on leverage. There's smart leverage. If that leverage is at 75% of the asset, and you also have an income stream from renting the property out that's paying your mortgage, you have insulated yourself way more from any downside risk than almost any other asset that you can own next to, US Treasury bonds or a CD at the bank that's secured by the FDIC.
Yeah.
And just taking the time to explain that to somebody and like, hey, here's the real power of leverage. And then when you run the numbers for them, again, we're doing, third grade math here. This is what your principal reduction is every year. Even if the property appreciates at historical appreciation of, let's say, 2% a year, we're very conservative on those metrics. And, right now in a lot of markets, Houston included, you're probably seeing 4 to 5 over these like longer periods of time, right? On average. Yeah. Well, your 25 grand for every 100 grand that you put down is now making, 20 to 24% return on its money.
And
where else do you get that with the protection on the downside risk?
Correct. And don't forget to mention the fact that you have tax benefits that you can take.
I mean, I'm not even getting into that. Get into tax benefits. It's I mean, your return is infinite. So, a lot of people don't understand that too. But Trump just got elected. So let's just acknowledge that for a second. Trump just got elected. He's got a Republican Senate and a Republican House. And bonus depreciation, which I've talked about ad nauseum on our channel and to our clients, but the people that really get it, it's such a magic pill once you understand how the bonus depreciation works. But let's say I make, for every $100,000 I make in income, I have to pay $35,000 to the U.S. government, right, as my state and federal income taxes. So for every $1 million, and I'm just using this conservatively so we can follow the third grade math easier, but for every $1 million, I'm sending $350,000 out to the Treasury Department. Well, if I take that $300,000 and I buy enough real estate that it turns my tax liability into zero, that $350,000 that I would have otherwise sent to the US government is now invested in real estate that's paying for itself. So it's a store of value because I have $350,000 in equity because I put that as a down payment. It's a store of value. And I own an asset that's probably $1.5 million with that 350 grand being paid for by my tenants, zero tax liability. And then every year I'm buying down the principal on that $1.5 million. I'm not even talking about the appreciation of the $1.5 million. I'm just talking about the fact that that's almost an infinite return. That $350,000 that you would have written a check to the US government for was a sunk cost. That was going away. That's a $350,000 loss. But by flipping that into a $1.5 million asset, if you think about it in that way, it's an infinite return because that money would have been gone otherwise. And now you own an asset with it and you have $350,000 in equity the day that you close. That should blow everyone's mind.
Boom.
The fact, I mean, I wish I had a louder speaker
It,
to be
it,
able
it,
to take advantage of that.
it comes down to taking, educated decisions and understanding like, well, how are the nitty gritties happen? And that's where, I talk through a lot of my clients just saying, hey, it's fairly straightforward as far as finding a tenant. You have a property management company that can handle it. A lot of my clients are busy individuals, doctors, lawyers, business owners. They're not, somehow there's this trope saying that, oh, I need to go fix the toilet. You're not the handyman. And the other part of, as far as fixing property, it also depends on the kind that you buy. If you buy, old properties that need a lot of repair, yeah, you may face those issues and you may continue to repair some. But if you're buying new or very recent construction, most of those homes don't have any major things that you have to do for 10 plus years.
Correct. And they also have the highest rate on the cost segregation for your depreciation benefit.
Correct.
So if you're buying new construction versus old construction, you're going to get a higher dollar per square foot on your depreciation by buying new construction.
So overall, it just takes doing it. And once you do it once and you realize that it's not as scary as everybody talks about, then you're okay. It's the same way how I see a drastic difference between first-time home buyers and even somebody who's buying for their second or third time. That there's a level of seasonality, or kind of like being a parent. When you have your first kid, you're a lot different than when you have a second or third.
Yeah.
Once the second kid falls, you're like, you'll be okay. Just get up, go, go, go. First kid, you're like, oh my gosh, what do you need?
Yeah, that's so true. I mean, with my first daughter, I was like hovering over her while she was sleeping, like making sure my finger was under her. Like, is she still breathing?
She was breathing,
And
yeah.
then by my third kid, they're like fall off the bed, and I'm just like, oh, they're fine.
Yeah, they get up. You're like, you good? Good. All right, let's go.
You're good. Yeah, you're good. I love that. Well, a couple things before we let you go. One is, what is something that you find true about Houston or in the real estate market, maybe in general, that nobody else is talking about or would be an unpopular opinion? What do you foresee, or what do you just think there is as far as your mind that's an advantage right now that nobody else is talking about?
So one of the things that I find interesting when people talk about markets just in general, whether nationally or locally like Houston, they talk in very big generalities like all of Houston's the same. And one of the things that we're able to do every year, and no matter if the market's up, down, sideways, whatever people want to talk in general, we're able to find really good deals for people, where and I don't want to give the impression everything's going great or everything's going badly, but when we're selling property, we're able to sell it for top dollar for our clients. And when our clients are buying, we're able to have them buy for bottom dollar by finding the right deals. And that's the part I think that people miss, because they keep waiting for this timing, but
Yeah.
that's not a thing. There's no such thing. Like you can analyze the market, what it is today, and then you can get the best possible deal, because there's always a range, right? The best possible deal is you should have bought it 30 years ago, but you know what? Not 30 years ago, 100 years ago. It's kind of like that old expression. When's the best time to plant a tree? 25 years ago. When's the second best time? Today. So you're not going to do it blindly just anywhere, but you are able to find a great deal today in the quantity that you need, guaranteed.
Yeah, agreed. And I also think that if you want to partake in like the tax strategy side, that's even more relevant there, because taxes are only going to keep going up, or you're, entering your higher income earning
Yeah.
years. And so having that tax strategy now, regardless of if the market's perfect, is so vital.
Correct.
I mean, if you can do it now and take advantage of cycles in the markets, maybe interest rates come down by 2%, maybe they go up another 2%. Who cares? The point is, you're protecting your income that you work your ass off for every week from sending 35% of it to the federal government and turning that into something that you can own as an asset. I don't know if I need to like get it tattooed on my forehead or hire a banner to be flown over like every NFL game across America, but it is the most powerful asset that you can have in today's market in real estate is a tax strategy to offset your income. Then once you have that strategy and you couple it with somebody like Semyon or somebody like our company that's putting you in connection with these deal opportunities, that's almost the easy part. The hard part is, how do I set up my tax strategy? What's my 10-year plan? How do I turn my spouse into a real estate professional? We can help you all with that too. And so being able to put you in a position to put that plan together is the hardest step, and we'll do it for free, which is also, I don't know anybody else doing it. Try to get that from Dave Ramsey. He's gonna coach you for free, or Grant Cardone, or any of these other guys. Like, I do this for a living and I'm not charging you. Anyway, actually, there's a Patreon that I'm going to list at the end of this.
At the end of it, no, I got to ask for likes and subscribes, please.
Yeah, likes and subscribes. And no, I'm just kidding. I would never do that. I don't feel comfortable, having people buy education courses or pay money out of their pocket for something that is free, available information to people. It's just, we've been doing it for so long that I can help fast track you on that. Semyon can help fast track you on that. And I want to, I'll make money if you buy property from us. Semyon makes money if you buy property through him, but I'm not going to charge you for the information.
Yeah, I wholeheartedly agree with you, because none of this is complex. This is very easily accessible and easy to do, and straightforward. The other thing that, one of the things, like we talk about money and things like that, one of the things that I also see on the human impact side is, like, I love helping people. I love helping our clients who are investors, but I also love to see the tenants, because they're able to live in a house that most of them can't afford today. That doesn't mean they can't afford in the future, but you're giving them the opportunity to live in a house instead of live it in a smaller apartment. So that's the other value that you're providing to people, that you see where people are like, oh my gosh, I get to have a whole house, instead of just being confined to, well, I guess I'm going to have to live in an apartment, or until then I can buy a house. So that's the other part that's always heartwarming to see.
Well, and you're also not connected to some like multinational corporation that's your landlord.
Correct. That's the other part. The vilification of the landlord has been interesting to see from a corporate side, but what people don't realize is, I think it's over 80 or 90% of all landlords are, individuals, people who are kind-hearted. They, they're interested in making money, but they're also not these villains that sometimes get portrayed in the media for some reason.
Yeah. Well, and I think, you can really separate yourself as an owner and as a landlord by treating people as human beings, and, recognizing your ability to do good, like you said, about putting a roof over someone's head that they wouldn't otherwise have. But also, doing little things like, sending them gift cards for Christmas, or, hey, I'm going to take $100 off your rent for Thanksgiving, the month of November, or whatever. Just like those things go a long way.
I'll give you, actually, the thing that goes the longest way is just having somebody who answers their phone.
Yeah.
And when you have a property management company, they'll answer the phone if you decide to do it yourself. And it's not that they're calling you every day or something, but just being able to reach somebody when there is a problem, that's the biggest thing that they're most thankful for, and that you're nice to them. So, if something happens in their life and they're like, hey, I'm so sorry, my payment didn't go through today, I'll send it tomorrow, is that okay? And there's a human being that says yes, no, whatever, but they're not treated like a number. And I think all of us enjoy that much more than just being a digit and having, such rigid systems.
I couldn't agree more. I mean, that's how we treat all of our clients too, and our tenants. We're a people first business.
Yeah.
And then, the product or thing after that is so secondary. I mean, you're in the people business. And so, you gotta remember that. Well, I think that's a great place to end things. I really appreciate your time. We're gonna have to have you back on. I really want you to get me something in Spring Branch to take a look at. That would be great.
Okay, very good. Happy to.
I mean, we're gonna be sold out here in by the end of the day today, probably.
Yeah.
So what do you got for me? What are we looking at? What's the next deal?
Like I said, there's a few options in Spring
No,
Branch,
hey, they're
and
gonna have to tune in to the next one. We're gonna end the recording.
That's it. There you go. All righty.